Okay, so now that we know that assets can be fixed or current, let's focus on the fixed, which we have just explained and listed a lot of examples. But we also need to know that the fixed assets are further divided into tangible and intangible. So the tangible ones are the fixed assets we can see, feel, and touch. Okay, so they are the fixed assets we can see, feel, and touch. And the intangibles are those we cannot see, we cannot feel them, we cannot touch them. So examples of the tangibles include the land, buildings, furniture, equipment, premises, machines, okay, etc. Then the intangibles, they are not so many, looking at the scope of the curriculum. So that we have the goodwill, like I listed, the goodwill, the copyright, the trademark, and patent. You can bother yourself about these intangible assets. And sometimes investment in shares. Investment in shares. And those of us who have done BM appreciate that shares refer to ownership part of a company, right? So if you have investment in shares, that is also a fixed asset, but it's an intangible one. Okay. Then for the tangibles, I don't want to list them because you know these ones. We can now move on to the current assets. The current assets. So what are current assets? These assets normally do not last in the business for more than one financial year. In other words, these assets are expected to be converted into cash within 12 months. Okay, so these are assets that are easily convertible into cash within one financial year. Okay, so more or less, like, they are not expected to be there for more than a year. They should be converted into cash, right? So let's look at examples of these current assets. Would professors want to give a try on examples of current assets? Okay. I think I'll call, okay, I have Portia and Austin reacting. Prof. Abubakar. I think Bridget owes me a response to one of my questions. Prof. Bridget, are you ready to, let me see if she's even here. Wow, she's not. Prof. Abubakar, any idea as to what an example of a current asset would be? Okay, let me call the professors. Austin, let me hear from you, then I'll take from Portia. Okay, Austin, I don't know, your microphone wasn't.
Sir, please talk.
Okay, so the stock of goods. Awesome. The stock of goods, that is one. Oswald, please present your answer, then I'll go to Portia. So the stock of goods.
Please check that.
Okay, so we have the stock. Also, thank you, debtors. And I believe you know who debtors are, the customers who owe the business. So for example, if you are selling shoes and your customers buy and they don't pay you, these people become your debtors. So customers who owe the business. If you have an Indomie joint, people come and eat the Indomie, they don't pay, then they become debtors, right? They bought the thing on credit. Okay. Any other from any professor? I see Portia. Let me pick your answer on that, Portia.
So say, please, bank.
Okay, so the money you have in your bank is one, and then let me add the cash. But I'll add some two unique assets. Maybe some of you might have not thought about it, and that is prepaid expense. Prepaid expense. And the final one is income in arrears. Okay, now I think we are familiar with stock, debtors, bank, and cash. Let me speak about the next two. That's prepaid expense and income in arrears. Unless my professors have a thought, or I think Mommy is still around. So Mommy, if you can share your thoughts on this one, that is if you want to assist us. Prepaid expense. Prepaid. I think it sounds similar with something we are used to. Prepaid. Okay, so when you hear of prepaid expenses, it simply means that a cost we have not incurred yet, but we have paid for. Let me give an example to make it simple, especially in the area of renting. You see, sometimes you go to rent a building, and the landlord will ask you to pay for 3 years advance. It is the same as the prepayment I'm talking about. So you pay in excess of, actually you are in the first year, you have not even spent a month in the room, but they are asking you to pay for 3 years advance. So those months or years you have not used the building, okay, but you have paid for, can be determined or termed as rent prepaid. So you have paid the rent in advance. So prepaid rent. So prepaid expense, like I said, is a cost you have paid for, but you have not incurred, right? The common one I was referring to is our electricity system, current electricity system, where you buy before you use the light. You pay for the electricity before you use it. And this is a current asset to the business. The question is how? Because if I give a landlord 2 years advance, but I'm actually in the room for the first year, then the rent for the next year, which I have not stayed in the building for, is my resource. So at any point in time, you see tenants asking landlords that, oh, please, I will not stay for the next year, so give me my money. They are doing so because they have ownership to that amount of money they have with the landlord. Please, does it make sense to us?
No.
Okay.
Yes.
Okay, so I'm hearing no and I'm hearing yes. So I guess the yes would explain further
No.
for Professor Akoli, Mensah, Augustine. So who said it? Yes. Okay, let me use another example. Prof. Akoli, let's say you go to a chop bar, right? And you buy a
Okay,
bowl
sir.
of fufu with some chicken, and the cost is 50 cedis. Now, you give the woman 100 cedis, 100 Ghana cedis. What have you done? You have paid in excess of the cost you have actually incurred. Okay, so it could be termed as you have prepaid the cost of the food. It is 50, you have given the woman 100 cedis. Now, the ordinary arrangement will be that, oh, tomorrow when I come and I buy food, you use it to set it off. But you can go there and say, oh, please, tomorrow I'm not coming, so give me my 50 cedis. So until you incur the cost, that resource belongs to you. Okay. Until you eat the food, that 50 cedis is your resource. That's the point I'm trying to make. Is it okay now?
Okay, sir.
Uh-huh.
Yes,
So,
sir.
So until you use the services or you consume the product, if you have paid for it, you can claim ownership of the money because you actually haven't benefited from the service or the product. So that's prepaid expenses. So the ECG bit I was referring to, when you go and buy, let's say, 100 Ghana cedis and you put it on the meter, right? You see that the meter deducts as and when you use. Okay, so at a point, if you don't want to use the remaining credits, you can just stop the meter, and the remaining 80 cedis or 70 cedis, whatever, is your money, right? So that's prepaid expense. Prof. Austin, you have a question? Okay. So examples of these prepaid expense, you could have rent, prepaid, okay, where you pay your rent in advance. You can have insurance, prepaid, okay. You can have the salaries of your workers prepaid. So there are some companies, they pay their workers in advance. Okay, they can pay them like 3 months advance. Okay, so until the worker has worked for the 3 months, the company can decide to take back the money because the workers have not earned it, right? Then the last bit is income in arrears. Income in arrears. Now, I believe we all appreciate that the word arrears means it's owing or it's outstanding or it's due or it has been unpaid. Okay, now let me explain this bit. So you go to Melcom. Melcom is a business, all right. Even though they don't do credits, permit me to use this example. So you go and buy goods from Melcom and you don't pay. What does it mean? It means that Melcom has earned the income because you have taken the goods, but you have not paid them. So they haven't received the income. And that means that that income is outstanding or is in arrears. The customers have not paid. Another example is if Omega accounting class, we sell shoes and then our customers come to buy the shoes. What does it mean? Immediately we supply the shoes to them, we have earned the money or the revenue. But it's possible that they will tell us, oh, Omega accounting business will pay next month. But in our books, we can write that we've made sales, just that we haven't received the money. So the sales will be in arrears, and that is income in arrears. And why is it an asset? It's an asset because it's our own resource with people who are yet to pay us. Okay. Any question on this one? I don't think so. Thank you very much. So, professors, these are your current assets for you. So take very good notice of them. So we've now been able to discuss the types of assets. Can we move on to liabilities? Liabilities.
Yes, yes.
Okay. When you hear liabilities in accounting, it simply refers to debt. If you all understand Fanti or P, it means a car or the car, right? So liabilities refer to debt or owings. I think I have a question. Okay. But technically, we can also say or refer to them as financial obligations. So I prefer that one. So liabilities are financial obligations or debts owed by a business to third parties. Now, there are two types of liabilities as well. But before we go on to the two types of liabilities, let's know examples of liabilities of a business. Examples. I think professors would have to assist me here. Examples of liabilities. Debt. So if you pick MTN Ghana or the grocery shop in your community, what are some of the debts such a business will be having? Some people are quiet. Oh, Bridget is back. Prof. Bridget, would you share with me on an example of a liability? Yeah, somebody is raising their hands, but I'll call the person later. Okay, I'm seeing something in the chat. Is it from Bridget? Okay, so I'm seeing bills. Bills. When you say bills, what bills are you referring to? Bills. Okay, for Bridget, I'm waiting. Okay, I think Bridget is still writing the point. Prof. Josephine.
The taxes.
Okay, taxes. Okay. I think we'll deliberate on that. Thank you. Any other? Portia?
Sir, please, creditors.
Creditors. I think I'll accept that one. Austin?
Sir, please, loans.
Loans. Okay, so some of the points you made are correct, but like I said, we'll not venture into those areas. I think Josephine hinted us about tax. Yes. Most of the times companies owe tax to the government, right? But we'll not bother much about that. Okay, so let's look at the simple liabilities that we can find. So we have the loan, bank loan, we have creditors, and creditors simply means suppliers, the business owes. So when you go for goods from your suppliers and you don't pay, your suppliers become your creditors. Okay, we also have bank overdraft. Bank overdraft. This is more or less like a quick loan. I have even remember. You see how MTN is offering this quick loan on on our MTN Momo. The bank overdraft works like that. So, but the difference will be that the bank overdraft, immediately money hits the account, it is set off. So, for example, you go to the bank and you take, say, 1,000 cedis, but actually your balance was 200, and the bank allowed you to take 1,000 cedis. What it means is that you are owing the bank 800, and that's the bank overdraft. Immediately somebody sends you money, the bank will start settling that 800 you owe them. And this facility is given to a certain type of account holders, the current account holders. It doesn't work on the savings account, right? The current account. We'll look at types of accounts, a bank account later on. For now, that's a bank overdraft. The next liability you can think about would be expenses in arrears. And you see, this is the opposite of the prepaid expense. Okay, so while prepaid means you paid before using the product or service. Arrears means that you have used it, but you haven't paid. So in the scenario I used about the rent, if you have used the room for 1 year and you have not paid your landlord, then it means that the rent is in arrears. or you are owing. So that is a liability, right? And then the other one is income received in advance. I know this one would also cause a confusion, but it's also the opposite of income in arrears. You see, the income in arrears is where the business or the company has supplied the goods or provided the service, but it has not received the income. The other side is this time the company has not rendered the service or provided the product, but it has received the income. So example, we are a cleaning company, right? And then we have been contracted to go and clean the gutters in Cantonment. We haven't done the work, but we have been paid. So what it means is that we have received the income in advance. Until we go and clean the gutters, that money does not belong to us. So it is a liability. Professors, do you appreciate that?
Yes, please.
Great. Okay. I'm hinting you on some of this because they will be appearing as we go. So that's income received in advance. I think for your level, these are majority of the liabilities you see, but let me also add debenture, and also bonds. Okay, these are also types of loans. Okay, but they are issued by certain companies, or so we'll delve much into it later. So these are your liabilities, but like I indicated, there are two types of liabilities. Two types of liabilities. And again, as we go into our next break, professors are going to do this activity as well. Now you see, I'm bombarding you with the activities because that's what your new curriculum is asking us to do, right? So you bear with me. So activity 1.3, you are going to state the two types of liabilities. And list, in fact, you define it. So you listed the two types of liabilities, define them, and give two examples each. So that will be your next activity. Well, I wish you can do this in pairs. So I don't know if I can quickly pair you up so that you WhatsApp your partner, you combine your efforts, and then you do this activity for me. Is that okay by you, professors?
Yes, sir.
Yes.
So can we do the pairing now? Who is pairing who and who is not pairing who? I think when we do the pairing, one person will be left because we have 7 students. So what do we do, professors? Do we do the pairing or you do it individual? Group or individual?
Sir, please.
Okay, I'm hearing group, I'm hearing individual. So which one am I picking? Okay, whatever the case be, for now, let's do the individual. I think we are yet to have our groupings for accounting. We'll do that grouping. So let's do the individual. Then we'll finish up our last session after this activity. Please, let's all do well to rejoin because you see, as we are going, things are becoming a little bit technical. So you need to be in class to appreciate them, okay?